Welcome to Common Sense Investing. My name is Cameron, and today I'm going to introduce to you, stock market investors, one new stock on the stock market. Without wasting any of your time, let's go. Hypercharge Networks Core. This is a very tiny little picocap stock, $4.9 million market cap, trading in Canada on the TSXV Venture Exchange, trailing 12-month revenue of $8.3 million. They're expected to have some high growth here. Potential inflection point to earnings in 2026, 76 million implied shares outstanding, and about 10% insider ownership. I never thought myself that I would be making this video on Hypercharge Networks because in 2023, I made an entire video series on Hypercharge calling them a pump and dump. In this video, I am going to have to explain what caused this as well as what has changed to all of a sudden make me a little bit more interested in this company. What is the story? What does Hypercharge Networks do? Charging Forward Together, this is a company that installs electric vehicle infrastructure in Canada and the United States. They offer business EV charging, residential EV charging, and a growing and expanding opportunity in fleet EV charging using preferred partners in a lot of locations. What makes Hypercharge unique compared to some of their competitors is they do have a capital-light business model. So Hypercharge employs a capital-light business model by partnering with top industry-leading hardware providers instead of manufacturing our own equipment. This approach allows us to scale and pivot without the significant capital expenditures, product risks, and time constraints associated with manufacturing, leading to sustainable and rapid growth. So other companies develop this EV infrastructure. Hypercharge is the middleman from that infrastructure, going from a manufacturing plant to an actual completed product on a fleet, on a residential or commercial building. Now, the opportunity here for Hypercharge Networks is whether you love or hate electric vehicles, you have to admit there's not enough charging infrastructure. I know that people that love electric vehicles say all the time, I wish there was more infrastructure for charging. And the critics against electric vehicles say it's mostly not going to work because there's simply not enough infrastructure. So one thing we can all agree on is that Canada and North America probably needs more EV infrastructure. Insert Hypercharge. Right now, for such a small company, $4.9 million, they're already in 9 provinces and territories in Canada and 13 states in the USA. So what caused this? Why, if they're in a growing industry, did this share price take a shit kicking? Well, time to look at a bit of the history here. The company paid $300,000 and 1 million shares to Gold Standard Media for some stock promotion. Well, it worked, and maybe worked too well. This was a video from Morris Invest, which is a fairly large YouTube channel. They got 7 million views within a few days. That was absolutely insane. Everybody was talking about this company, and you guessed it, share price went from around the 10 to 20 cent range to over $6 Canadian. So what's changed? Where are they at today? Why am I making a new video on them 2 years after this video series talking about how they were a pump and dump? Well, before I go look at the numbers, don't forget, I'm not a financial advisor. I'm not your financial advisor. This is not a solicitation to buy, sell, or hold this stock. This is a very high-risk stock. Hypercharge RTOs, November 16th, 2022. They pump up their share price in early 2023, and I make a bunch of videos calling them a pump and dump. And what Hypercharge Networks did is on May 17th, 2023, they announced a huge private placement here. This was a life offering, 4.7 million shares at $1.05 for $5 million gross proceeds. They got a pile of cash. Very, very smart thing to do. Obviously pissed me off at the time because I don't like pump and dumps. But I mean, if they had not done this financing, this company would probably be in a different place today because that cash lasted them for over 2 years. Recently, in 2025, they had to do another financing. They only raised $1.8 million. They had to do it with 29 million shares and at 6.5 cents with warrants at 12 cents. So they finally kind of ran out of money. They had to do another financing. And I have to question, whether management is starting to figure out that they need to do something different. They need to hit that inflection point to profitability and cash flow positive, because they can't keep doing those $1 financings. They're now down to doing 6-cent financings. Is the company willing to change? There would be opportunity in that. In their Q3 2025 earnings, they had record quarterly revenue of $4.98 million. This is a company with a market cap of $4.9 million, and they produced revenue in one quarter of $4.9 million. That's up 756% year over year. They have quarterly gross profit of $1.07 million, up 498% year over year, and their net loss, that inflection point that I'm talking about, was reduced by 85%, marking strong progress towards profitability, so they could hopefully stop with these 6.5-cent financings. We're going to look at some information from the company, so this is their safe harbor statement for you to read. Core business offering, I like multiple ways for them to make money from selling the hardware, the software that they offer with the hardware that they're selling, and then service support for the hardware. They have different ownership models: purchase, lease, Hypercharge, owner, operate. So either somebody buys it or they lease out this equipment and take all the profits for themselves and their partners. So this looks like very rough dotted lines of pretty significant growth. When you zoom into those numbers a little bit, I mean, this looks pretty darn good. They're saying full year 2025, $9 million in book sales, as well as charging ports delivered, up 76% year over year with 2,133. They were talking here about full year 2025 revenue of $9 million in book sales, which seemed extremely high considering they had $3.1 million of revenue in full year 2024. So when people were looking at this, they were right to be skeptical. But so far in the 9 months of 2025, they have already produced $7.2 million of revenue. Operating expenses in the past 9 months were $4.8 million. That is a 32% decrease from the prior year period. Revenue is up 262%. 32% decrease in expenses. That's exactly the trend direction we want to see. So this is just a quick introductory video. I can't cover everything. This is a very nuanced company, especially considering that they're new on the market since 2022, and they've had this very storied existence since then. They definitely have some significant risks to talk about that I won't have time to cover today. Go take a look at the management salaries, some of the share-based compensation, which they have been improving on, but it was bad in the past. The warrants that they have, as well as coming up in July, we should see their 2025 audited earnings, which would make me feel a lot better than the quarterlies, which are unaudited. So definitely a lot of risk still in this company. But if you look at the rewards, I mean, the little pump and dump thing back in 2023 scared a lot of investors off. They threw Hypercharge Networks in the garbage. They stopped watching the company and the share prices crashed. This is a completely unknown company. They are beat up. If they can finally succeed and start producing net income and positive cash flow and start really doing well in the market, are they at an inflection point, not in 2025, but in 2026? I think potentially they could get there. Can their 2025 audited earnings coming up in July change people's minds on Hypercharge Networks? And of course, if you want to keep researching stocks like Hypercharge and some other fantastic microcap stocks in the market, commonsenseinvesting.ca will introduce you to my Patreon, Discord, my Substack, and every other way to connect with Common Sense Investing on social media. As always, thank you for your time. Good luck investing.